Now, we've seen that policies have winners and losers, and sometimes there can be sort of unintentional consequences even. So tax policy, for example, has to balance a lot of different considerations. Aside from the fact that no one wants to pay taxes, we have to balance the idea that more tax revenue can mean more government spending, which a lot of people want more government services. But it may also decrease individual spending, right? Because if we're spending our money by giving it to the government, then we have less money to spend on our own. And also, if sales taxes go up, you might not want to buy as much. Things like capital gains taxes can actually decrease investment. So, increased taxes can potentially slow the economy. And that's often the argument uh, of our sort of supply side economists. Those who say that supply should be stimulated more than demand would point to how increased taxes can really suppress supply. Now, Keynesian economists would generally prefer more taxes because they think that government can stimulate demand. Now, Keynesian economists would typically prefer a progressive tax system. Progressive tax system means that the wealthy pay a larger share of the tax burden. Supply side economists generally prefer a regressive tax system that typically allows the wealthy to pay still more money, but not as large of a share of the taxes. And what do I mean by that? Well, think about someone like, Bill Gates, who has a lot of money. If we were to have a flat tax in the US where everyone paid the same amount in taxes, so let's say everyone paid $10,000 in taxes. Obviously, that's an absurd number, but let's just say that was the case. Well, if I earn $40,000 a year and I pay $10,000 in taxes, that's a quarter of my income, right? I am left with $30,000 for all my my cost of living. Now, if you're earning $1 million a year, $10,000 is nothing. You still have $990,000 left. That's fine. If you're Bill Gates, $10,000 is like me going out and grabbing a gallon of milk. So you can see how a flat tax, it's not that Bill Gates is paying less in taxes than I am, but as a share of his income, it is significantly less. Now, if we had even, say, a flat tax rate where everyone paid 10% of their income, now as a share of Bill Gates' income, he's paying the same amount as I'm paying. But that's still going to affect his bottom line less than it affects mine, right? Because the less you earn, the less sort of you have to give away. And ultimately, Keynesian economists would favor a graduated tax rate where maybe I pay 10% of my income and Bill Gates pays 40% of his. Now, we know that in the US, that's not quite how it works either. What we have is tax brackets. So you earn up to a certain amount, and that's, say, your first bracket. So like 0 to 10 grand is bracket 1. 10 grand to 50 is bracket 2. 50 to 100 is bracket 3, and so on. And any money that falls into that first bracket gets no taxes. You don't pay taxes on that first $10,000. Any money that falls into that second bracket, we said 10,000 to 50, pays 5% of it in taxes. Then 50 to 100, all that money, so that next $50,000, you pay 10% on that 50,000, and so on. So if you hear something like, liberals these days, they want to tax us at like 50%, what they're typically saying when they're proposing 50% tax rate rather, is for the top bracket. So for, say, the money you earn over maybe $1 million. So that first million isn't taxed at 50%, it's taxed at whatever those lower brackets are. But maybe that top bracket is 50%. So keep in mind, when you hear this stuff, the rhetoric can get pretty heated because no one wants to pay taxes. But ultimately, we know that if you prefer Keynesian economics, you're going to prefer a progressive tax system where the wealthy pay a larger share. And if you are a supply side economist, you are going to generally prefer a regressive tax system where the wealthy do not pay a larger share of their income. They still may pay a larger net amount, total amount, but they don't pay a larger share. And of course, how we decide this and what we do can really affect government spending and individual spending.